Hello, Frédéric.
How are you today?
Fine. Fine.
Yes, all right, look at them, they're all here,
Yeah.
they're beautiful, and you have the cameras, so how can you be also you so lucky? Can you tell us about this survey? What is it about?
Yeah, sure. So actually, we did one survey last year on the EXPLORETECH, which was the first one, where we had 228 answers, but most of the answers were actually coming from France and Europe. This year, we have decided to launch another survey, but on a worldwide basis.
So this makes the difference between the last
yes.
survey and this one? Is this
Exactly.
one is worldwide?
Yeah. And the second difference is that this year we have also chosen to construct another sample, which is French, more advanced, let's say, companies which are more familiar with tech, in order to have a dynamic approach on what is going to be the investment in tech in the world from what we see today in the coming years.
All right, enough talk, and I think that we have something to show.
Exactly. I think we have a nice video to show now.
Exactly. Let's have a look.
Nice.
Yes, yes. So, as you can read, tech is part of the solution. Definitely, yes. As you maybe have read also, you will have the possibility to have this presentation plus all the presentation, not only this little video on Natixis CIB social networks tonight. Am I correct?
Yeah, exactly. As soon as this afternoon, you will receive the whole report, actually,
Yes.
which I'm going to present.
Go
It's
and
the main
see it.
takeaways today. Yeah.
It's so interesting, and I'm sure it will give you some ideas, and then, of course, then you come and see us. Now, I'll leave you the floor, as we say. You have nearly 10 minutes, and after 5 minutes Q&A. 5. I count on you, right? Okay.
Okay, thanks, Frederic. So if we start, as you have understood, so this year, so the main difference is that we started to ask all the respondents around the world how they feel about tech and how they feel about digital assets in particular, with equally divided response between Europe, Asia, the US, and the Middle East. And after that, we had a sample of 125 respondents coming mainly from French, which are more tech-familiar companies, in order to give that dynamic approach. So if we start on the results, and maybe we can move to the first slide, yes. Basically, what you see there is that, we're already on the slide. Oh. Yeah, exactly. What you see is that we are already in an accelerating momentum of tech transition. So that's the first message. What is important is that we have 44% of the companies worldwide which have already invested in technological projects. And half of those investments, or I would say slightly more, it's 27%, have done that through their own research and development departments, actually. Which means that almost another half have also used other ways to invest in tech, namely using startup or new ventures, for instance, which is 17% of the companies. And after that, you have the use of corporate venture capital or external funds to invest in tech. The second point, which is really interesting there, as you can see, is that if we compare those answers worldwide, we see on the chart left-hand side, with the answers coming from a tech benchmark, you see that over the tech benchmark, it's actually 90% of companies which have already invested in tech, which means that the potential for further deployment in tech investment is huge still worldwide, from 44 to 90%. And this will be done through most of the channels, either the R&D directly, but also via venture capital, funds, and startup-like ways to invest in tech, definitely. After that, what we can mention is that even though those potential for the investment in tech is huge worldwide, there are still a lot of hurdles to invest in tech. 3/4 of the companies we have actually surveyed mention a couple of hurdles to invest there. And as you can see on the chart right-hand side, it actually starts with complying with regulatory constraints. That could be obviously ethics or the use and collection of data, for instance, which is the main priority and problem for the small companies, for the ones which have less than 100 million euros of turnover. After that, the second main hurdle is conduct change. And it's also the main one for the companies which are between 100 and 500 million euros of sales. Third one, after that, when the company is growing, actually, you see that the obstacles to implement their tech transition is moving and changing. After that comes the financing digital transition, which is the main hurdle for the companies between 500 million euros to 2 billion euros of sales per year. And it could be either finding equity partners or finding debt, actually, to finance the technology transition. And finally, when the companies are really well advanced on their tech transition, the main difficulty is obviously to recruit talents, which is one of the key problems we see in the tech and telecom industry, particularly coming from the surveys, and more generally for the big companies, for the ones which are above 2 billion euros of sales per year, or the ones which are more familiar with tech today. Second thing to mention there is that if you compare how many companies are saying they can make their investments in technology profitable today, you have an 11% share in the companies worldwide. And if you compare that percentage with the one you have on the companies from the tech benchmark, that percentage moves to 38%. Which means that most of the companies that are doing their tech transition manage to make it profitable over time. There are some other insightful message from that first part, and coming back to what Anne-Christine mentioned, actually what we see is that 25% of the company survey would have some interest in extracting values from one of the project of division, for instance, via an innovative financing or innovative teams, which is definitely an interesting lesson also from the survey. After that, if we move to digital assets, so the first thing, as you have seen in the motion, is that, surprisingly or not, the respondents are mentioning that the most interesting digital asset to invest today for them is cryptocurrencies. It gathers 25% of the interest globally, and 17% of those are interested in considering issuing or investing in cryptocurrencies, which is the largest percentage among all the digital assets that we have looked at or their associated technology. And if you look at the chart left-hand side, you see that's particularly the case for the Asian corporates, actually, which are much more inclined on looking at cryptocurrencies compared, for instance, to what are saying the companies from the Middle East, which have more interest in looking at the real asset tokens or the security tokens. Second thing to mention again is a big difference between the world sample and the tech benchmark sample. For the tech benchmark sample, if you look at the chart right-hand side, you see that their main interest is actually not around cryptocurrencies, but it's much more regarding real asset tokens. So tokenization, which is the process of digitally representing an existing asset off-chain to a distributed ledger, is actually making a lot of sense for many sectors. If you look at the chart left-hand side, you see that surprisingly today, a couple of sectors are showing interest in real asset tokens above 30%, which is the case, or close to 30%. And notably, that's the case for metals and mining, for instance. So you can think about, for instance, financing, tokenize the financing based on an intrinsic value of a mineral deposit or its extraction, such as gold, for instance. After that, maybe tomorrow, we could think about some other sectors which are going to benefit from the advantage that is given by tokenization, which could be make assets more accessible and therefore more liquid, or reduce the transaction cost, but also improve market transparency. And for that, I invite you actually to read one of the very interesting reports we did this year on tokenization for the real estate, as you can see, picture right-hand side. About NFTs now. So NFTs comes third in terms of interest for the clients. 11% of those are considering issuing or investing in NFTs, which is still significant, I would say. Now, if you look at what would be the advantage given for the NFT in the various industries, that's also very interesting. What you see is that for worldwide companies, the first advantage which is given by those non-fungible tokens is actually to attract new customers. But if you go to companies which are more familiar with tech, so from our tech benchmark sample, you see that the main interest on the chart left-hand side is moving to fighting against fraud. And that's very interesting because obviously in some industries, such as the luxury industry, we are seeing today the issuance of NFT associated to each physical item that will serve, each physical item you could think about a bag or a watch, that will serve as a digital passport, and that will be a way to avoid actually counterfeiting, which is also something we have shown in another report, for instance. Finally, what do we see in terms of use cases for Metaverse? And again, that's really different between the worldwide view and the tech benchmark view. For the worldwide view, the Metaverse will be first seen, as you can see, on how to attract new customers, and notably through gaming experience. After that, and very close to that, comes the new ways of communication. And you could think particularly of digital influencers there, which is coming with 40% of the answers. So very close to the 42% we have for the attracting new clients. Now, if you move to the tech benchmark sample, again, they are saying things different. They are more mentioning what we call the corporate metaverse compared to the crypto metaverse, and particularly optimizing operations through digital twins, for instance, make more sense for the tech benchmark, which is the first answer they give to that question, compared to attracting new customers. And again, optimizing the operations could mean, for instance, using digital twins, which could be crucial for the implementation of a predictive maintenance strategy, and avoid or make sure that you can avoid financial losses, avoid production stoppages for a given company, which is also something we have highlighted in a couple of industries on some research report. And I think we are done, actually, Frédéric. Perfectly on time.
Yes. Let me check. Wow, perfect. Applause. Well done. You got me. All right, perfectly. 10 minutes. Okay, so now it's time for a Q&A session. I'm sure there's a lot. Please raise your hand and ask your question. Yes, sir. Can we have a mic right here, please? I'm going to ask you to stand up and to present yourself before you ask your question. Thank you, sir.
Yes, hi, my name is Bruno Rigal. Quick question regarding NFTs and tokens. Is there any legal and accounting framework, depending on countries of the issuers and investors, to account for that? Or are we still talking about fairly theoretical items?
Oof. That's a very good question.
You want a question? You have questions. Thank you very much for this question, anyway.
Legal framework for the NFT. I don't know, Patrick, if you want to take that.
That's a nice one.
Yes, a few words. So indeed, those frameworks are varying a lot by country. There is, in fact, a task force in many different places to address this. It's really depending on the underlying assets. So you have utility tokens, which are mostly driving customer adoption. Typically, you can think of that as sport token as a key example. And then you would have security token, which are in fact a different form of ownership of existing companies or assets. So the security token are actually following all the rules linked to securities and ownership, in each of the countries. On the utility token, it's a more open topic. It's a bit like crypto. Crypto being somehow the ultimate utility token, and that is actually being addressed, as you know, through by central banks through CBDC discussions and also through some effort of self-regulation.
Thank you very much. Next question, please. Mike, please, right here, miss, or miss. Thank you. Can you just stand up, please, and can you say your name, please, Alain?
Yeah, thank you. Thank you, Fred. My name is
Welcome.
Alain. Thibault, you conducted this survey last year. I don't remember. It was 1 year exactly in terms of anniversary. This year, what was the timing of your survey? Because it's pretty important due to what happened in 2002 in the tech industry. This is the first basic question. Second one, what are the main differences with what you conducted last year in terms of survey and the result that you have this year?
Thank you very much.
Thanks, Alain, for the question. So first, on the timing. Last year, we conducted the survey between April and June, mostly, 2021. Until the very early July 2021. This year, actually, you're right, the survey was not exactly in the same timing. It was conducted from the end of May to mid-June or mid-July or even later in July, actually. So the sample is not the same. And obviously, as you could rightly mention, there was an impact from obviously the crash of the crypto and tech bubble this year that we have not seen last year, for sure. Then if you look at the results, so it's not easy to compare the results because, as I mentioned, the samples are really different. Last year we were on a European sample. This year we are on a worldwide sample. But nevertheless, if you look at least on the global sample, what we see particularly is the fact that overall, if you take the sample of last year, which is more comparable to a tech benchmark, you had around 90% of companies which have already invested in tech. More or less the same as what we see in our tech sample of today. The difference is how many companies are profitable in doing tech this year. Last year it was 28%. This year it's 38%. So it looks like many companies have become more profitable while the percentage of companies which are doing investment at scale are more or less the same. Last thing is regarding the appetite for the digital assets and the cryptocurrency. So obviously this has changed a bit. The appetite for crypto has moved from 14% last year to 11% this year if you take the tech benchmark. So obviously there was an impact from the crash of the bubble. but not as huge as we could have guessed, to be honest, because 11% is still a big percentage, I think.
All right, thank you very much. Maybe one last question. Yes, sir, thank you very much.
Good afternoon, Thibault. Thank you very much for your presentation. In one of your slides, you showed that there's a... Oh, sorry, my name is Pierre. Sorry, my name is...
For the cameras, for all around the world, people are listening to you.
My name is Pierre Macera. So on one of your slides, you showed that there's a discrepancy between the Asian companies and the rest of the world about cryptocurrencies, and that the rate of adoption or use is much higher on the Asian side. Can you understand? Can you explain to us why you think so? Is there a cultural bias? Is there a regulatory bias? What's the reason for that? Thank you.
That's a good question too. Yeah, cultural bias for sure, because what we have seen from the EXPLORETECH of last year, notably when we conducted actually the interviews with companies before the EXPLORETECH 2021, is that we saw in the interviews that many companies which have big exposure in Asia were mentioning that most of their clients and sometimes from their suppliers have some interest in doing business in cryptocurrencies or in stable coins with those companies. So clearly there is a cultural bias there where the use of cryptocurrencies and potentially the stable coins is much more developed, I would say, naturally in Asia from what we see elsewhere. Regulation, to be honest, I'm not sure I have the answer, so I don't know if somebody from the take-up or from the research wants to dig into that on regulation for crypto.
Yes, but quick.
Yes, a few comments. Definitely, Singapore is driving a lot of the innovation in Asia on crypto and has taken a very strong step to become a hub. Similarly, Dubai is also willing to accelerate, and that was part of the sample. I would also say that what's happening probably in Europe, in the US, is that you have currencies which are extremely strong, for obvious reasons, the euro and dollar. And therefore, the whole issue of how you actually hedge when you are a citizen or where you are doing trading across multiple countries is probably less acute than what you could have in other parts of the world, in the developing countries, obviously, but also in Asia.
Just maybe last thing on that is that what is interesting is to mention that the interest the companies see for the cryptocurrencies, the added value of cryptocurrency in their business is actually common if you take the answers coming from Asia, the US, Europe or Middle East. So the first answer is always simplify payments with clients and suppliers in all the regions of the world. And that's interesting. After that, the second thing is a sectoral bias, where actually you see that that's mainly the case if you take metals and mining, energy, and transportation sectors, where the answer is above 60%, while for sectors such as finance and tourism, cryptocurrencies are more seen as a way to attract new customers.
All right, thank you very much, Thibault.